If there's one thing successful players excel at in facilities management, it's the ability to adapt, evolve, and move forward in the face of constant change and an unpredictable future. ISS is a perfect example. From its origins as a small security company in Copenhagen, through 120 years of growth and change, to becoming one of the few truly international FM service providers with impressive customer loyalty and a track record of thought leadership in our sector. Our keynote speaker this morning is Chief Commercial Officer of their UK and Ireland business and Chief Operating Officer of their Specialised Services business. With a background in catering services, he's been with ISS for 14 years, through another period of significant change. With a talk entitled Looking for Certainties in Uncertain Times, please welcome Simon Titchener.
Thank you, Martin, for that introduction, and good morning to you all, and thank you for allowing me the privilege of addressing you today. Of course, it would have been fantastic to all be here face to face, but thanks to the team from IFM for working hard behind the scenes to put together what I'm sure is going to be a fantastic day. At this moment in time, much of the world is still dealing with uncertainty in one form or another. When I look back to the summer of 2020, everyone was coming out of lockdown and starting to plan for the future. But we rapidly had to change plans and tactics as we entered the second and third lockdown. And given where we are today, it looks likely I will spend my second consecutive birthday in lockdown, something I could never have imagined. Certainly, none of us can predict the future, and uncertainty has been the watchword of the COVID-19 pandemic. If this situation has taught us anything, it is that we need to learn how to live and thrive in uncertain times. I read a recent article that said certainty is overrated and over-rewarded. For me, an acceptance of the uncertainty is more important. Not only does it reduce stress, fear, and unhappiness, but it also allows businesses to focus on two things. The first of these is the ability to be present in the here and now. In this, businesses can focus on doing everything to their best ability, giving stability to clients and building reputational advantages for their organisation. Individuals and teams going the extra mile has helped cement long-lasting goodwill with clients. The role of the cleaner to a business raised it from a functional support role to an intrinsic part of the makeup of a business in the height of the pandemic. And collaboration with customers, suppliers, and others key to your businesses build trust and organically strengthen your brand. I visited the ISS team at Nightingale Hospital last month, and this to me showed the best of what we can do in facilities management. The here and now of the situation meant the rule books were just simply ripped up on mobilisation, and new collaborations with competitors and suppliers meant we could mobilise the hospital within days. The certainty was that if we didn't do it, lives would be potentially lost, which really sharpens your focus when you're in that kind of situation. This strong ethos enables clients to accept their uncertainties too. And from that, the client-supplier relationship becomes stronger, creating opportunities to extend and build out contracts, rather than going back out to tender. And of course, showing gratitude to your workforce helps build employees' loyalty to your business. The second of these is the acceptance of the here and now, allows a business to visualize the future, redefine its purpose, and identify multiple options, opportunities, and possibilities. The impact and challenges of today provides the opportunities of tomorrow. Interestingly, a recent Gartner research paper showed that this may not necessarily be about reinventing a business. Over 70% of business leaders indicated a focus on existing markets to fuel growth through the provision of more services and more products. There is a lot of hearsay out there saying the future will never be the same and it will look totally different. I agree, things will change, but will it be groundbreaking, beyond recognition, and require businesses to completely transform? I don't believe it will like that across the board. Businesses will still require workplaces, places to perform their businesses. They will still require our services to support those places and our people to deliver them. Clients will still value our expertise in doing what we do, so they can focus on their investments on their own products and services. Nightingale and all the other pandemic-related activity showed that you can rewrite the rule book and still deliver. Indeed, the certainty for me is that the learnings from all these experiences have made our toolbox stronger. Our business is more agile and created a sense of belonging in our workforce that needs to be nurtured and sustained. The future is about staying in tune and aligned with your stakeholders, asking employees what they want from you, talking to clients about how they visualize their future, and staying close and adapting to their response. Whether it is understanding the here and now or planning for the future one, certainty from these uncertain times is a continued need for great communication, both internally and externally. The pandemic has shown that brand credibility can be won or lost based on a wrongly worded statement or position, especially for those who have been perceived to potentially exploit the pandemic situation. And in facilities management, great communication between workplaces and employees has been so important, especially in the stop-start lockdown situation that we've all come to see and hear. But when the pandemic is over, will all of this be done in a reduced office environment? There is certainty that virtually everyone is looking at where there is potential to optimize their office space. Reducing the portfolio may seem like an ideal quick win for the CFO, but I've read lots of articles on how the need for workplace change has escalated during the pandemic. If hard-pressed businesses go down the route of a reduction in office space, as some predict it will, it'll be imperative to use some of that saving to enhance the workplace experience on those offices that remain. But that may not happen. I'm certain that some businesses have suffered so badly in the pandemic that they just can't invest in the changes needed. Short-term survival may take precedence over long-term planning. The Wall Street Journal's recent headline, "The Death of the Desk is Upon Us," suggests the impending demise of the office as a place for focus and attention. But it was Leesman's response, backed by worldwide research from employees, that really caught my eye, and more of that later. Another certainty coming out of the pandemic is the rapid escalation of the digital agenda. The pandemic saw 70% of businesses accelerating their digital business initiatives. And this escalation will continue as employees return to the office, with a greater emphasis on mobile applications and software-based technology to guide workplace experience, the ability to locate a free hot desk, arrange lunch, book a meeting room, and control the temperature in your office from your mobile phone. All of these things will help employees feel that it's worthwhile getting back into an office environment. And from a facilities management side, these applications feed into building utilization capture, so teams can review occupancy levels for meeting rooms, restaurant, desk areas, and workspaces. That intelligence helps us support the business going forward. Investment in IT, technology, broadband, Wi-Fi, systems in general accelerated massively during the pandemic, as it had a direct result on the productivity of employees. Many working from home, the certainty is that these quick fixes will need to form part of a much more certain IT strategy going forward. We continue to see working from home or remotely as a hot topic for businesses, and the certainty is that there will be change. But how much change? The recent Leesman review in December 2020 gave some interesting insights, most notably that a third of employees surveyed had a suboptimal home working experience. Those that thrive the most use dedicated offices at home, but for many people that is just not going to be an option. So sitting with a laptop on your knees in the front room or working off an ironing board will never provide a long-term productive home working experience. Unfortunately, some of the quality of the workplace they left in lockdown fall short of their expectations going forward, and businesses will need to react quickly to that. Coming out of the pandemic, there is a certainty that some employers will want to see change, and if businesses don't rise to the challenge, they'll end up losing good people. Leesman identified that employers need to dig deeper with their employees and understand how collaborative employees' roles need to be. Highly collaborative roles need an office environment. Highly individual roles have a better experience at home. So the workplace of the future needs to offer the best experience to match employee needs. We've already working on some clients who have surveyed their employees about how they would like to work once all the social distancing restrictions are lifted. In one company, over 95% of employees said they'd like to work full-time at home or adopt a flexible approach between office and home. Is that achievable, or indeed, is it desirable? Pre-pandemic studies have shown that employees given a home office choice would rarely be seen in the office on Monday or Fridays. This suggests that if flexibility is given to all employees post-pandemic, the office will be a lively hub of activity midweek, but like deathly quiet either side. The question is, how could a business justify the costs of a 7-day-a-week asset when only half the week is fully utilised? A lot depends on the makeup of the business. McKinsey's analysis of 2,000 tasks and 800 jobs in 9 countries highlights the complexities. Their analysis finds that the potential for remote work is highly concentrated amongst highly skilled, highly educated workers in a handful of industries, occupations, and geographies. McKinsey also argues that hybrid models of remote work, where 15 to 20% of your workforce have a home working office mix, risks accentuating inequalities at a social and societal level. And they also analyse the inequality, psychological and emotional stresses among employees, including self-isolation. The psychology of not being around people, some employees find stressful and distressing. Some employees need the habit and routine of going to the office at the same time every day, and some don't. The certainty is that if these models are adopted, employers will not only be juggling office space, but also need to reinvent processes and policies and create new employee well-being challenges. For me, a lot of what is being said is not new. Change in this industry and in business has been long talked about. The certainty is the pace of change we've already seen will increase even further as we exit this pandemic. Back in early 2020, a 7-year study into the workplace, the future of work, workforce and workplace, conducted by the Copenhagen Institute for Future Studies and ISS, concluded that the workplace is no longer viewed as the epicenter of an organisation. However, the research said that physical workplaces are still essential to create and support organisational culture that enables organisational strategy and business performance. To do so effectively, the physical frameworks combined with human-centric service must provide a holistic workplace experience where the end users can be productive and thrive. This hasn't changed. The pandemic has given a new opportunity for facilities management. In partnership with IT, with CRE and HR, facilities managers can act to create gains in performance in every employee and facilitate a workplace environment that can bring together people, places and processes to enable better business outcomes and secure a strong competitive advantage. Culturally, I'm certain that what makes up a business today will need to change tomorrow. The need for great people engagement has shifted. The ability for people and culture teams to quickly understand a new emerging culture will be critical. Where employees want a better sense of belonging, I've seen in my business being able to effectively manage their business in overseas locations. In a nutshell, the pandemic has shown that the workplace can be any place and not solely 4 walls and a building. But agility, flexibility, connectivity, globalization, productivity are all buzzwords that mean nothing unless the trust and freedom is embedded into the workplace cultures from the top down. The workplace is now not a physical asset where one performs a task, but the bubble around an individual to allow them to achieve their aims and goals. The office will never die, but will morph into a trophy asset where workers will congregate for a reason and not just to be seen. All this leads into the certainty that businesses will need to be more mindful of societal impact as employees have seen the benefits of a reduced carbon footprint, both individually and globally. Corporate social responsibility is certain to gain momentum going forward, with collaboration between businesses and facilities teams seeking to manage workplaces better, not just for the bottom line, but also for the community. This has already happened to a degree in the consumer world. Consumers have become king. With access to information, reviews, transparency from the internet, that enable them to have the upper hand, the choice of what they buy, when, and from whom. Ethics, morals, sustainability all matter. The same happens to employees. Post-COVID employees will become king. They will choose what and how they will want to work, and only the businesses that consider this carefully will be successful and win the war on talent. So there are certainties out there, and the stakes will be very high. There's never been a better opportunity for facilities management companies to step up and make the changes that will provide productive environments for employees and help drive their businesses forward over the next few years. Remember, bad companies are destroyed by crisis. Good companies survive them. Great companies are improved by them. Thank you and enjoy Workplace Futures today.
That was brilliant. Thank you, Simon. Keep the comments coming, folks. One of the things that's good about this format is that we get to see what you're thinking about the points being made in real time rather than surfing Twitter later. So keep it up. We can pick up on any interesting points in the Q&A later. Now, one of the most popular sessions at Workplace Futures every year is our annual look at the state of the market, with an expert analysis of prospects for the year ahead. We've all heard lots of different perspectives on what happened to FM in 2020, from the opportunities created by the new focus on hygienic cleaning to doom and gloom about the future of catering and the collapse of the high street. But what's the big picture? To shed some light on this and what it means for us all is a speaker who always brings real insight to what can be a confusing and turbulent sector. He is Transaction Advisory Director at EY Parthenon. I'm delighted to introduce Ian Marson.
Martin, thank you very much for that introduction. For facilities management, 2020 has been an incredible year. However, as always, we need to start with what have the challenges been. And I think for me, the key message to come across about 2020 and where we are going in 2021 is what we're calling the hidden stresses in the economy. We're all aware of the big picture of COVID and the challenges that's caused. But what is actually that meaning is happening in the wider and the deeper economy around us? So from our point of view at EY Parthenon, we've pulled upon a wide series of information. And we've looked to try and understand what are these hidden stresses that exist and underpin the sort of trends that we will see coming forth during 2021. And our belief is there may actually be bigger tests to come. These challenges that will come over the next 12 to 18 to 24 months should not be underestimated and will be key as you start to plan for the businesses going forward. But there are big opportunities. These challenges will be able to be turned into future opportunities and in goals and in a route forward for many businesses. But moving early and moving decisively will be very important. But let me go back now to the hidden stresses. This is a piece of work that was done for the EY Item Club. This is our sort of market study of what confidence is and what sort of the state of inflation and other key sort of aspects of the UK economy. And as you can see from the first chart here, services, including FM, have seen a double dip. The Purchasing Managers Index is a key indicator that we use to understand what the confidence levels are in the economy. And as you can see that for services in particular, in November, confidence really declined once again. Obviously, the big peak in April, or the big dip in April was known, but actually the fact that things have turned again in the second half of this year as we moved into the second lockdown and the third lockdown have been very, very important. However, it is worth pointing out that not all sectors have seen that. So whether it's manufacturing or construction, they haven't seen the dip that we've seen in services. And this carries through into what we call gross value add. This is actually the look into what the Bank of England and others believe the growth will come from in the economy coming forward. And whilst in all sectors there has been a bounce back, services, which was the driver of the recovery over the summer months last year, has now fallen again into negative territory. And actually the depression that is causing and the expectations of where we might be are what we need to investigate going further. But I say the key message from here is there has been a double dip, especially in the services part of the market. And if I move on now to the next trend that we see, which is the unemployment rates. Again, unemployment over the last few years has been steadily decreasing. It's been a long-term decline until we got into 2020. And as you can see from the right-hand chart, the spike that was caused by COVID has really been very, very prominent. And two different measures, whether it's the claimant count for benefits or whether it's the ILO measure of unemployment, both of these have shown that specific spike. But I think what is really important to point out here is that we are nowhere near the peak of that jump at this particular point in time. So in terms of a hidden stress, the expectation is that unemployment will actually rise greatly during 2021 into 2022. And that's purely a function of the furlough schemes that are currently operating. Businesses are being kept alive, they're being kept under government support at this point in time, and jobs are being kept due to the furlough arrangements. But that is not anticipated to continue long term. In the next year to year and a half, unemployment is anticipated and forecast to spike quite heavily, but will then come down again as businesses adapt to the new normal. So we aren't through the worst yet in terms of unemployment. And then looking at a different, one of the key indicators that we use in EY is what's called profit warnings. This is where listed businesses who are quoted on the stock exchange make announcements about what their proposed performance would be. And as you can see from the historic period from 1909 through to today, there has been a general trend. About 15% of businesses on an annual basis will issue a form of profit warning. But then if you look at 2020, you can see just how great that spike was. A significant increase in profit warnings during the last year. And much greater than we saw even during the height of the global financial crisis or the dot-com bust and 9/11 back in 2001. Almost twice the level has been seen. And normally profit warnings, especially multiple profit warnings from a business in an individual year, is an indicator of extreme financial stress. And typically we'd expect to see insolvencies following soon afterwards. But what have we seen this time round? Well, we've seen individual sectors focusing on profit warnings. We've seen, unsurprisingly, travel and leisure, retailers, right up there with the level of profit warnings they've been announcing. Industrial materials, quite surprisingly, has also been up there. Disruption to supply chains, disruption to product flows, and reduction in consumer demand has really had an impact in industrial manufacturing. On the right-hand side of this chart, you can see that there were 62 listed businesses that moved into the danger zone. And what we mean by that is they made over 3 profit warnings consecutively during 2020. But the key point about these is that not a single one of those actually failed during 2020, which is a historic situation. Normally, when we see 3 profit warnings, insolvency typically, in a large portion of cases, or at least a financial restructuring, occurs very soon afterwards. But not a single one of those 62 listed businesses moved into that situation. And as we look at the overarching data, one other really important message comes out. And that is that insolvency and profit warnings trends diverged significantly during 2020. As you can see from this chart here, they have diverged in the past, but typically profit warnings are a much lower level than actual insolvencies. And whilst they may approach each other at time, Typically, that remains to be the trend. But during 2020, profit warnings spiked, but insolvency levels actually declined from historic averages. And we know from talking to our colleagues in insolvency and talking to other firms who deal with this, that actually insolvency levels are currently at an all-time low, which seems unusual given the stresses and the strains that we are seeing in the wider economy. And again, the simple answer to this is it's down to the level of government support that is currently existing and keeping businesses propped up. But this is a hidden stress. This is a challenge that will come out over the next year to 2 years as that government support is increasingly withdrawn, both furlough and actual more wider government financial support. A good example is HMRC are not currently collecting on sort of unpaid certain taxes from corporate perspective. They are deliberately giving people time to pay. And that is allowing this financial stress to build up and will have to come out over the next year or two as the government changes its pattern back to enforcing these trends that it's done and withdrawing of that financial support. So we do believe there is an insolvency dam building up. We do believe that come later this year, we will see customers and clients who've been behaving and been supporting themselves will start to find it increasingly hard to stay afloat. And in particular, one sector from an FM perspective that really needs to be considered is the real estate sector. And again, the trend here, the spike in profit warnings for the real estate sector was exceptional last year. Over 30% of firms actually made a profit warning in real estate last year. And again, many of these firms will struggle to continue. So, what does this really mean? Now, one of the key messages you may have heard about the situation and the recovery that we're seeing coming out of COVID is what's called a K-shaped recovery. This concept is gaining traction and simply means that some sectors and some firms are actually doing very well out of the recovery, but others are just in a spiral and heading downwards. And this chart here demonstrates what we are seeing. We are seeing that sectors such as art and leisure, such as manufacturing, such as hospitality, are seeing that decline. We are seeing others growing, such as whether it's other services or whether we're seeing areas such as ICT or the public sector or education. These are all areas that we are seeing the growth. But this change, this medium-term change, is a reshaping of the current sectoral landscape of the UK. But there are some really interesting pieces in here. A good example will be the back office services. This is outsourcing businesses. This is people who support other firms. But what we see there is a significant decline in unemployment, but it's not significantly hitting the benefits those businesses are bringing to the economy. So the firms themselves are expected to survive, but they are reshaping how they deliver their services, and they're moving away from being employment-based wherever possible. And that is the prediction that we are seeing coming through here. So it is very much seen to be a K-shaped recovery, and with certain sectors winning and certain sectors losing. And that comes through here when we look at what the contributions were to business growth. Again, consumer spending declined significantly during 2020, no surprise to anyone there. But also government consumption declined and investment levels declined significantly. But where that is and where this gives hope for coming forward is that investment is due to come back into the marketplace very strongly, both during 2021 and more importantly during 2022. So as businesses do come out, as confidence comes back, investment is forecast to come back very strongly in future years, as consumer spending should come back as well. But what I would call out here is the red bar that you see on this chart, which is government consumption. And one of the key challenges that we anticipate is that government consumption will increasingly start to shrink again. It has expanded significantly during 2020 as support mechanisms put in place, but we do anticipate that government will start to retrench on its spending. It will start to try and pass its stresses within its own financials onto its suppliers and look to reduce spend very heavily in other areas of government expenditure. And I think this will become a key trend that we will see over the next 12 to 24 and maybe even longer in the marketplace. So, one thing that I thought would be quite useful is what are the key themes that we are seeing? And on this particular chart here, we've both got what businesses have said is really important to them as they go forward, but also what consumers are saying about it. And I think from an FM perspective, one key factor that we should bear in mind is that 61% of businesses that responded to our survey indicated that they felt that the changing economic model of city centres, whether that's high streets in terms of shopping and consumers, or whether it's actually the office layouts, will be a major area of change. And I think that's really important to sort of call out here. Businesses themselves believe that the model is going to change. Whether it changes to the extent they state here is a question, but the use of technology, the use of connecting with customers in a new way through digital routes is seen by businesses to be the key driver. This is how they're intending to invest. This is how they're looking to build their operations going forward. And they are building this on a fundamental belief the economic model is going to change. So as FM businesses, as we look at these, we should be bearing this in mind. How do we change the model to accommodate what most businesses believe they are likely to do? But this also sits with the right-hand side chart. How will consumers believe that the company's actions will influence their purchasing behavior? Consumer expenditure is likely to be one of those areas that actually helps drive the recovery. And firms are seeing that consumers are saying that the protection of staff, protection and rewarding their staff accordingly, is actually going to be a key driver of how they want to spend their money. And I think what this means is that the opportunity that comes out to the back of this is about generating that long-term value and that wellness for employees. And the FM world is going to be key in delivering upon that opportunity. And firms recognize that, they are seeing that, and they need the help and the support as they go forward to deliver that going forward. But it is about long-term value. It's not about short-term maximization of profit. So I think these two charts nicely point to a changing dynamic, an underlying theme that we've heard, but they actually provide data and evidence points that support that this change will happen. So what is actually going to drive 2021? Well, we've talked a lot about the economic and the policy related factors. The COVID-19 bounce back and the K-shaped recovery, not to forget the old Brexit, the EU trade agreement and the Northern Ireland Protocol. But I think another factor that is very important here is high unemployment is probably coming our way. Specifically, with actually low returns of the transient EU workforce. A lot of them have returned to their home countries during the COVID crisis, and they're not anticipated return. And this enhanced public sector squeeze that we anticipate will also be coming down as Rishi tries to sort out the financials, given that the spending bucket has been open now for a little while. The industry also needs to think very carefully about this high street, this city centre model. How will it change? The new normal working patterns and the expectations of employees will change. But how will the FM model evolve from being a cost-focused outsourcer, which will always be important, especially where you're working with the public sector, to becoming much more of a strategic business partner, working out how you differentiate, and the disruption factors that will really need to be brought in here. Not only this trend towards more freelancing and independent workforce, how can you support that sort of arrangement? Obviously tech, this is talked about every year, tech disruption such as smart buildings and robotics, use of better analytics, these will really drive changes to how firms perform. And I just want to call out cybersecurity. One interesting factor that we have seen during 2020 is the rise in spear phishing. Attacks on remote workforces have gone through the roof in the last year. And many firms have announced actually significant losses through to spear phishing attacks. The remote working format has just driven that. But lastly, and I think the key opportunity for FM firms here is the ability to differentiate themselves. Organizations need to attract staff back into offices. And they plan to do that, in our understanding, through offering differentiated services, a real well-being focus to actually get people back into city centre and office environments. And this, I think, is where there is a real opportunity for FM firms to play. So there has been some significant challenges. There will be even deeper challenges probably coming through in the next 12 to 18 months, but there are some real opportunity areas for firms that are nimble enough to take advantage of those. Thank you.
Thank you, Ian. Again, Ian will be back for the Q&A before coffee to address some of your comments. Now for a closer look at what the future holds for us in the wake of so much disruption. Over the years, Frost & Sullivan have published some really insightful research on trends in our marketplace, from the opportunity of new technology to the changing landscape around the environment. Our speaker has been part of that team for more than 20 years and is both a partner and the global head of their energy and environment business. To give us his take on near to mid-term trends, please welcome John Raspin.
Thank you very much, Martin, for the introduction, and thank you to everybody for the opportunity to be here talking today. I've been asked today to talk about near to mid-term trends and opportunities in the market, with a particular focus on FM, but looking at kind of workplace in the broader perspective as well. And you'll notice on the slide that my subheading for the day is technology and sustainability to dictate success after the pandemic. So without further ado, I thought I'd share, being an analyst by trade, I thought I'd kick off with a bit of numerical analysis. Not the prettiest chart, and I think at least the good news is that the worst part of the chart is now behind us. But in 2020, just like most industries and markets, the FM world suffered. We saw in the UK, which I'm using here as an example, 5.8% drop in revenue last year. So that means that spending was down by almost 6% on the year before. Tough to take. Obviously, an awful lot of companies went through a lot of pain last year. I suppose the good news there is that we now know what the total economic impact on GDP in the UK was last year, and that was closer to 10%. So you could say that the FM industry outperformed GDP in tough times. So there was opportunity for service spending to get above the overall economic impact. I think the key message here, though, really is that while we do expect the market to return to growth fairly quickly, we expect growth in 2021, we don't actually expect the market to get back to 2019 levels until 2022. And while there will be growth through to 2025, it's going to be fairly modest. So a compound growth rate of 1.4% through to 2025 is probably not anything to get super excited about. And really the long-term conclusion is that the overall spending is relatively flat once you factor in inflation. So at one level, you could see that as not too positive. At another level, we could see that as a large industry which is maintaining spending over a 5-year period. And there's an awful lot of opportunity for innovation and strategic creativity below that to make the most of what is a sort of going to reach a sort of $40 billion plus market by 2025. But the key to success is going to be finding those opportunities, focusing in the right areas, becoming more efficient in both operations and client interaction to make sure that individual organizations can find growth in what is bound to remain a relatively challenging environment. Worth a quick look back. What were the challenges thrown at us last year by COVID-19, many of which kind of still exist today. I'm not going to go through all of these, but what you can see is that, as we all experienced, a mix of market-facing challenges. We saw pipelines diminished, of course. We saw overall spending down. Internal challenges, both on the financial side, working capital pressures, more on the operational side, motivating the workforce was tough. And continues to be in many cases, particularly in areas where workforces remain a little bit depleted. Making sure that we manage the safety and testing and everything to make sure we could keep the workforce engaged, keep delivering services to clients. Training took on a new dimension. It became apparent fairly quickly that there were instances where many workers were underprepared for the tough conditions they were going to have to work in, and at the same time, training wasn't that easy to deliver. So, we faced the challenges. Most companies have managed to find a way to navigate through most of those internal pressures, but at the same time, it was tough on the client side. We know that the impact on all the various industries was quite different, as will be the recovery rates of the different sectors. And in one way, it's quite easy to map out a slide like this and look at areas where spending remained fairly strong last year, in some cases even increased, where what we would call a sort of net positive impact. Other segments obviously suffered deeply. Tourism and leisure, pretty obvious. Some segments of retail saw a nasty negative impact. But at the same time, it's important to look into each of these and understand that there are subtle trends and ups and downs within each. So we've got healthcare, for example, as an area where we saw net positive impact last year and following through into this year. Inevitable that NHS spending was up. But at the same time, while there were some positive signs there, many companies did quite well bringing services to the healthcare space. There were also some signs of a number of contracts being brought in-house. So even in the healthcare space where there was positivity, there were also signs of challenge and signs of different behaviour on the customer side coming forward. Retail, an interesting one. While the segment overall suffered and was one of the worst performers in terms of overall economic output last year, at the same time, online retail thrived. There were many opportunities for kind of bringing services to distributors, to networks, to warehouses, to kind of supporting companies who were investing heavily in their e-commerce strategies, while at the same time, obviously, stores or anywhere that was kind of dependent upon occupancy suffered deeply. So it's a complex story. We know that now, and I think while it's becoming more and more apparent where the impact was felt across different segments, it's now going to be extremely important to spend time understanding the recovery profiles of each of these different areas. I want to spend a little bit of time now and really move into what are some of the trends we're seeing and how we see the next sort of 5 years looking. What I've actually started with here is a slide that we've been using for a little while, looking at what we see as the overall top transformational trends in the FM world. And I've just layered on top of that, while we see all of these as important, we've tried to kind of show where we've seen the COVID-19 impact, either leading to reduced importance of a trend or kind of a relative continuity of a trend at the same level it was before, or increase in importance. So we don't see any of these becoming less important, but you'll see that the trends that are highlighted towards the right of the slide, we all see as increasing in importance. So sustainability, early last year, there was a lot of talk about next steps in the green transition. As we saw COVID take impact, there was a lot of talk about the green recovery. We've certainly seen sustainability become a lot more important, a trend that was already making waves in the segment, leading to behavioral changes, both in the way we deliver services, in the services themselves, and the way companies operate. But I think one of the really interesting things that we're beginning to see at the moment is sustainability, what I call moving beyond energy and environment. So we've seen a lot of the focus around sustainability in past years being around environmental performance, around the greening of energy management, etc. But if you look at the 17 Sustainable Development Goals of the United Nations, which many people have been working on since they were released around 2015, 2016, only actually about 6 or 7 of those are environment related. We're now moving into increased importance of many of the kind of social elements of the sustainable goals. So tackling poverty, tackling working conditions, and so on. And there's a really important role that the FM companies can play, both in their own performance and working towards helping their clients achieve sustainability goals. Health and wellness has been a really important element of workplace management and FM for a number of years. And I think, again, last year, we saw the continuing importance of this, and it became a much more complex challenge for companies to manage when they had dispersed workforces. So we're going to come back to that and what it might mean in the future of increased remote working and so on, but definitely a really important area for service delivery. Likewise, the use of technology, both AI and robots, artificial intelligence. We're moving further into the era of cognitive facilities, smart buildings becoming more intelligent, not just digitally connected and automated, but actually moving into the more autonomous era. And again, IoT and cloud services, the use of digital technology for remote management, predictive maintenance, and so on. What we really saw during COVID was the acceleration of the use cases coming to life that are really enabling IoT and cloud services to move to the next level. So a huge amount of development and research around this in the last few years, many companies gearing up well to deliver, but not that much actual real progress in live use cases. But what COVID brought along was the opportunity for some of that to really come to life. And we expect that to be a big opportunity area in coming years. So when we talk about sort of workplace outcomes and the role that FM plays in that, there's kind of a number of different elements behind this. And I think what we've been talking about for a number of years now is the role of FM in the future becoming much more focused around delivering positive outcomes and moving on or moving away from the kind of historic approach of solving clients' problems. Now, while at some level problem solving is always important, cost management, etc., the challenge for a supplier that's focused on problem solving for clients is that it's very easy to get caught in the cost trap, and it's harder to move into the value adding areas. Where once we start talking about delivering outcomes and building solutions that are based around kind of measurable client outcomes in terms of performance, then we have that opportunity to broaden the impact within the client organization and move the value delivery on to the next level. And I think what's really important and what we've started to see in the last kind of 18 months or so is not just the language of the industry. Outcomes is something that we've all been talking about for a long time, and that's not rocket science. But what's becoming really apparent now is that the delivery of outcomes in a proper value-adding way is more and more about convergence. It's about sort of strategic innovation around service delivery, addressing the trends of service integration and partnering and collaboration, and bringing user-centric business models, really understanding what outcome as a service can mean, but layering on top of that the converging technologies and bringing IoT, bringing cloud, bringing data analytics. We're now seeing much more focus around things like virtual reality, contactless services and so on, which again are kind of use cases that have been triggered by COVID that are accelerating that convergence. So the role that technology plays alongside service delivery, for me, is going to be an absolutely critical trend of the next few years when we talk about outcomes. I think it's worth spending a moment just thinking about what all this outcome talk, when we talk about productivity outcomes, actually means on the client side. And we've looked at this at two levels. The first point is, why do companies care? When a client engages an FM provider, there's always a very clear scope of work, and that's what most suppliers will tender their services based on. But actually behind that, there's a whole load of priorities which sometimes get overlooked or don't get fully understood by the supplier to really know what actually the client cares about most and what they're trying to achieve behind those kind of performance metrics of the contract. And you can see on here things like staff retention, the performance of individuals, the kind of the operational excellence of the organization, and really big one, employee satisfaction, something that we're finding end customers telling us more and more is actually what they're looking to address, because they're understanding that retaining their attracting or retaining top talent is very much around the way, very much linked to the way they manage their workplace, their organization, and their career prospects of their employees. So thinking about that is very much part of FM. And what about the employees themselves? Again, these are not things that are necessarily always listed in the scope of work of an FM contract, but things that are becoming more and more critical, particularly as we're seeing kind of next generations entering the workforce and so on, what actually workers care about and what are imperative to be very much part of the outcomes that any service provider is bringing to the table. People want to have fun at work wherever it is they're working. People want to be able to see career progression. We see health and wellness coming up again as something which is raised repeatedly by end users. And really, when we talk about user experience as part of the FM outcomes, these are some of the elements that that really need to be visible for the users on the ground. And let's face it, it may not be there in the contracted part of an FM service scope, but actually this is how it's from the element of the individual users that the feedback will eventually come back to the service supplier. So making sure that we're addressing these is going to be really, really important. The next point I mentioned before a little bit, talking about technology. I quite like this cartoon that I came across late last year, and I think it quite sums up well what we see in the buildings and FM sector, that we were sitting in a situation not too long ago where there was a lot of technology capability, a lot of evolution and investment. But as I mentioned, the use cases weren't always as visible or as compelling as service suppliers would like them to be. And we were seeing people sitting around saying, yeah, digital transformation, we understand it's coming, but it's a little way out there. I don't think we need to do anything just yet. But then COVID came along and led to some quite interesting accelerations around there. And as I keep saying, that bringing some use cases to the fore. We started to see IoT, for example, becoming a really important part of bringing sort of data monetization and outcome as a service type models to life. Talking a little bit here about cloud-based remote services, one of the areas that we saw the strongest growth last year of any market in the buildings and FM space was around remote services for refrigeration. So sort of remote monitoring of refrigeration in retail, in supermarkets, and also in distribution. And of course, it's quite easy to see why such a use case became really important during COVID. There was growth in the customer sector, and there was an increased need to deliver services with as little contact as possible. So we saw cloud-based remote services becoming really important in that whole area of services for refrigeration. And I'm sure people can think of many other kind of examples of things that came to life last year. But what we've seen is that the trigger point has been passed, and many of these areas are going to play a really, really important role in the mid to near, near to mid opportunities in FM over the next few years. I think just wanted to sort of slightly simplify here what we see as some of the biggest impact areas of COVID and where that subsequently starts to bring up the opportunities. We all know that we've seen an economic recession. We've seen contraction in the FM market, but also in the wider economy. But at the same time, we're seeing attitudes changing on the customer side as a response to that. And it might open up things like increased attitudes to risk sharing, new models for FM contracts, things like increased need to focus on organizational resilience as part of the service offering and so on. Working from home has obviously had a massive impact on service delivery. We believe at the moment that the indicators are that by 2022, the office occupancy won't increase any more than 80% of what it was in 2019. I've actually seen other estimates that are much lower than that. And it may well be that level is also with us for the long term. So we're going to see sort of occupancy-based challenges for services, but at the same time, creative companies are thinking about how they can bring services to the remote worker and bring things like home support, IT platform management, training, etc., to empower and make more efficient the home workers. And an unemployment surge brings its own challenges, but at the same time, there might be signs of increased outsourcing. Social distancing, while it's creates challenges in the office environment and is part of the working from home challenge. At the same time, that we are seeing opportunities, or we have seen opportunities for reconfiguring facilities, but also ongoing opportunities for things like occupancy tracking, contactless technologies and services in the workplace to make sure that the socially distant working world can continue to perform. I'm a little bit up against it in terms of time, so I'm just going to flash up a few slides. All of the slides, by the way, are available to anybody who's interested, and of course we'll take questions on all of these areas in the discussion after this, but just a few key areas that I wanted to pick out. I think, key opportunity areas, what we're calling post-COVID, which really means the next sort of 2 to 5 years. Augmented operations, the use of technology. We've already talked a bit about AI, but also things like augmented and virtual reality in operations to allow technicians to perform better while also traveling less and experiencing less contact. Things like contactless services. Energy management, an important area. We've seen the kind of the opportunities for FM service suppliers to move fairly seamlessly where they have the technical capabilities into energy management as a complementary sort of service alongside FM, and of course data analytics as a really important complementary sort of front end to service delivery to sort of drive margins and performance overall. So where does that leave us in terms of kind of concluding points? I'm just going to go through these very quickly and then leave them with you before we open up for discussion. I think in the post-COVID world, innovation must focus on digitalization, sustainability at the core, and I think that kind of need to move into more customer-centric business models with user experience as the main focus is going to be critical. We do see the market bouncing back from a tough 2020 pretty quickly this year, but revenues are going to take slightly longer to get back to where they were before. It's going to be at least 2022 before we see the same spending levels as we did in 2019. And I think one of the really key points here, sort of service offerings and kind of the whole concept of how we measure value to clients is slowly moving beyond talk around total cost of ownership or kind of total cost of service and building efficiency. Next generation solutions need to be much more focused on the convergence of technology with services if we really want to see the use cases coming to life. I talked a little bit about what that means, and really to me that's the key area of innovation for suppliers around that is around business model innovation, actually playing with what outcomes really means. It's not just language, it's not just changing the way you talk to suppliers, but it's actually building value propositions into performance contracts, into actually measuring outcomes based around different types of business models. And I think last but not least, we've been saying this for a while, and I think now more than ever in the post-COVID world, it's tough to take on the future alone. And I think we see partnership, collaboration, and sort of co-creation of services, whether that's with partners or customers, becoming extremely important in the future. So we've talked a lot in the last 12 months about the need to get closer to our clients than we ever have before. I think that's something which is going to continue throughout the next through the next 5 years or so, and that importance of partnership and collaboration is definitely something that's not going to go away. So thank you very much. Great to have a chance to talk to everybody today. I apologize that we've raced through the second half of the presentation a little bit quickly, but like I said, the slides will be available to anybody who's interested, and I look forward to further discussion and questions as we go through the day. So thank you very much.
And we should be back live now on stage with John and Simon. First question, I guess, to both of you. How are you feeling about what you've heard this morning so far? John?
Well, just to jump in, I've loved it. I think, as we've been saying all along, it's a shame that we're not together, but I think as far as replicating things virtually goes, this is as good as it gets. It's fantastic. And as I mentioned earlier, for me, judging these kind of events, the best way to judge it is how lively the chat room is, and it's absolutely buzzing. There's comments coming in left, right, and centre. Everyone's fully engaged, and I think the presentations have got us off to a great start.
Yeah, no, I totally agree. Interestingly, considering none of us have actually sort of got together before today, the common themes coming through all of the presentations, there's a thread going through all of them, which I think was really interesting to see. So that was a good point from my perspective. Yeah, absolutely. So yes, and thank you, audience. You're all doing great. As the guys say, the chat column is buzzing. What I'd like you to do now is to post some questions for John and Simon. And we've got 11 minutes before we go to our first break. So please post your questions.
Meanwhile, while you do, and I hope you've all been using the polls, filling in the polls. I'm looking at the polls now, John and Simon. So the first one, how does 2021 look in comparison to 2020? That looks like people are pretty confident. 47% more confident, 24% about the same. Only 10% feeling less confident 2021 compared to 2020. Does that level of confidence surprise you?
No, I think. Sorry, Simon, if I could jump in. I think from my point of view, it's probably about what I would have expected. I mean, I think being more confident than we were just under a year ago probably isn't necessarily a massive, improvement. But I think, we certainly expect this year to be better. Considerably better than last year. It's going to take us a little while to get back to where we were before. We know that for sure. But we see a lot of optimism in the market that things are going to slowly start getting back to normal. We looked at it earlier in terms of revenue numbers, and we see the market being, spending being up this year on last year, even if it's going to take well into next year to get back to where we were in 2019. But I think that that optimism is what I would have hoped to see, and I think it's what the market is starting to feed back.
Yeah,
and Simon, the second poll there shows the same thing. Business confidence, market conditions. Do you expect it? 51% say they expect the market to grow. 31% remain about the same, only 18% to shrink. Do you think your markets will grow this year?
I absolutely think so. If I look at sort of pipelines and things that we're seeing sort of as we entered into 2021 compared to this time last year, it's a significant increase on activity. So that obviously, I think, would prove that point. So I think there is more confidence out there. Obviously, the whole vaccine thing is making the confidence improve further. And I think every customer or client I speak to are really now pushing as much as possible to get workers back into the workplace. So, there's a lot of activity around how they're going to do that, much more than probably 6 months ago. So, yeah, I feel optimistic. I'll put a bit of caution in there, but definitely in a better space than we were, 6-9 months ago.
I agree. I think maybe one thing to add, Martin, I mean, there's a bit of a range of answers there, which is quite interesting. I mean, you sort of referenced the kind of the highest percentages and so on, but there is quite an interesting range there. And I suppose the market will reflect what people are seeing as well. There is still going to be throughout this year a lot of difference for different types of companies, and I think a lot of the rebound will depend on what type of services companies are exposed to most and what sectors companies are exposed to most. I mean, I think the retail sector is in for a bit more pain. I think the travel sector is in for a bit more pain. And I think, occupancy-based services are probably going to take a little bit longer to rebound. So I think that kind of range of answers as well kind of makes sense because there is quite a range of exposure to the different trends for different players, right?
We see that absolutely, John. When I look at the portfolio of our business and the sectors, absolutely, the travel sector still is really challenged, and there was some optimism that I think has disappeared again, probably since last night, with the amount of the overall travel until perhaps mid to end of May. So that's definitely put a dampers on that. But then we look across, where we see real growth has been in certainly the logistics businesses we support and in the manufacturing businesses we support. So we're fortunate we've got a good balance across our business to help us when there's some ones that are challenged, others are growing. So overall, it's,
I'm glad you mentioned manufacturing, Simon. There's been a lot of talk about getting back to the office and office workers working at home, but 60% of the UK's workforce don't work in offices. They work in factories and hospitals and retail centres and all those other things. Question there from Sarah Bean. How will FM manage to enhance the workplace environment when budgets are stretched? I'm thinking that while obviously that applies to the office environment, but I'm thinking, how do we do that in manufacturing and other places? How do we change those workplace environments to make them safer and more productive?
I mean, certainly from our perspective, we've had to work hard in all of our manufacturing customers' premises in 2022 to make them safer. So I think we've done a lot of work over the last 12 months to really see, put those improvements in place and make people feel safe in the environments they've gone back to working. As you say, we've had over 60% of our workforce have remained fully employed throughout the whole of the pandemic, and we put a lot of time and effort into that. I think there's more we can do around supporting people with their sort of mental health and well-being. I think that's something you can do. It's irrelevant of what segment or sector you're in. Putting time into that, I think, is going to be really critical, because the other thing we're noticing also is that as we are starting to see customer premises open, we have a number of employees that are nervous about going back into work, and I think, being at home, they've got almost agoraphobic. So how do we help them sort of with their state of mind to get back out into the workplace? So I think, for me, work around that is as important as any aesthetics into the workplace. I think that is going to be more important than whether it's been painted or there's new food offers, which will inevitably come. It is around how we help with the well-being of those employees.
John, I mean, you talked about the different sectors and how some sectors have been winners and some have losers. But if we've got to enhance workplaces and there's no money, that's the challenge.
It is a challenge, and I think you're absolutely right. Budgets will be squeezed this year. There's going to be a lot of cautious behaviour in almost every customer segment for a little while. Even perhaps those that are slightly less hard hit will still be being cautious for a little while. There's no doubt about that. But I very much agree with what Simon was saying. I think that there will still be a lot of opportunity there. It's going to require some slightly more creative thinking about how to tap into it. But customers in almost every segment, however they're squeezed, have got some tough questions at the moment about how they motivate their workforce, how they get the work conditions right, whether they've almost everybody is going to carry on, particularly with the kind of on the office side with some kind of hybrid model. I think we talk a lot about encouraging people to get workforce back to the office. I think that's going to be really important, but there will be a kind of a mix for a little while. And I think that that presents a whole load of opportunities of different ways of thinking around how to optimize sort of the workplace that people will be returning to, and also supporting remote workers. I think last year the kind of the rush to the home working trend has been brewing up for quite a long time, but nobody could have envisaged the sort of acceleration it saw last year that most of us are still in. But what happened last year in the kind of the huge rush to do that was that there was not an awful lot of investigating what the home working environment was like. Most companies just asked staff to stay at home, a little bit of checking in, of course, but you didn't have the kind of the full service checks of kind of seeing what people's working conditions were like from a regulatory point of view, or just from a kind of best practice point of view, and so on. So, there will probably, as things settle down and companies find their balance between home working and office working, there will be a bit of opportunity opening up for supporting those remote workers. It's not an easy area for most FM companies to get into, because it's a very, very different model. Having kind of hugely dispersed workforce, but I think there will definitely be opportunities opening up there as well.
There were a few questions came up in there, and we've just got a minute or so left, so quick answers. But insourcing, will the government take back in-house some of the stuff that is pushed out and relied on the private sector, which has done a great job? Will it take some of that back in-house? Will we see any kind of shift in the level of attitudes to outsourcing, do you think?
Do you want to go first, Simon?
Please.
I mean, I think, in the interest of time, I suppose, Martin, the answer is a bit of yes and a bit of no. I don't think we'll see a drastic reversal by any stretch. No, I think actually outsourcing will stay very strong. And I think actually we tend to see when budgets are squeezed, that bringing things back in-house is often seen as a bigger risk. We've seen it a little bit in a few areas already. You mentioned the government sector. We've seen a few hospital contracts last year and early this year brought back in-house. But at the same time, there's been an increased spend on outsourced services. So I think it's something that will definitely need to be kept an eye on. But I personally don't see some great big reversal of the trend, no.
No, I totally agree. I think in conversations we have with the Cabinet Office, I think actually we're going to see more opportunities coming to market from central government. You're right, there's been a sort of trend with healthcare, although equally there's as many coming out to market as more than was taking it back in-house. And and as I say, when I look across our pipeline, across all our segments, I see an increased lot of activity, whether it is government or private. So I'm not too concerned about that.
Okay, thanks, Simon. Thank you both. This is just before we go, there's a good opportunity for me to mention the annual Business Confidence Survey conducted by IFM each year since 2004. It provides an insightful snapshot of business sentiment each year. It'll only take you 10 minutes to complete. Don't do it while I'm talking. The link is coming up on your screen. I think it's probably on the reception page as well. Now we're going off to the first of our scheduled breaks. So for the next 20 minutes, you can network in the session rooms or network individually, or you can nip to the loo like I'm going to. See you in 20 minutes, folks.
Thanks,
Martin. Thanks, everyone.
Thanks, guys. Thank you.